Hey founders, Kirk Mitchie with Candor Advisors here. Quick update this week on early due diligence, or said another way, free look periods for potential buyers. What I mean by this is if you're getting outreach from a business development person or even a partner at a financial sponsor like a private equity firm or a growth equity firm, a structured equity firm, some sort of financial investor who wants to buy a piece of your business, have you stay involved and play for the proverbial second bite of the apple or some sort of capital event down the road, in addition to the one that they're presumably paying you for now. Beware here. Not so much for the predatory behavior. That's going to happen with any kind of buyer, and with the right transaction advisor, you can kind of level out the playing field there. What I mean here is that you can get really, really distracted by the outreach that says something to the effect that we find your business really interesting or compelling, or such and such said I ought to reach out to you. They give you a sense of what they're interested in, and then they ask you for a little bit of information. Now, I would tell you that generally speaking, you shouldn't provide it until or unless you have an NDA in place, and probably not until you have some sort of transaction advisor or buffer in between you and that outreach person. However, if you do engage a little bit, send them an email, maybe even send them some financials, understand this is death by 1,000 cuts. They're going to keep asking and asking and asking. You're going to get caught in the sunk cost fallacy, meaning I've already invested so much, or sent them so many emails back, I don't want to kill it now. So you'll continue to provide them with information. They may or may not have an honest intent to buy your business, but it's cost them nothing to ask for all that information, and it might hurt the sale price because you might inadvertently share something that you should have held back until you got more confirmed terms. Minimally, though, it's going to distract you. It's going to take you away from your core focus. It's going to start you thinking about the idea of selling your business, what you might do next, whether you should be running a process. Not saying that wouldn't be a good existential question to ask, just saying that there's a time and a place for that. And it's not with the, like I said, death by 1,000 cuts of having some financial sponsor, some private equity firm ask you endlessly without an NDA and transaction advisor and a process in place to provide a bunch of information in the hopes that someday they will provide you with a letter of intent or an indication of interest and then move into a transaction. If you want to know more about this and any other buyer, seller behavior, mistakes, best practices, navigate over to Candor-Advisors, check out the insights section of our website. And if I can help at all, click on the call to action button, the green button that says talk to Kirk, and let me know how. Thanks. Have a great week.